Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Let's not forget that Facebook changed its name to Meta based on its belief that the metaverse is where we would all inhabit going forward. So now that's kind of yesterday's news, and now we're shifting to AI devices. So I think just watch this space in terms of trends being shorter than we think. So I think that is the end of prepared remarks in terms of what's been going on this week. There's been a lot to contend with, and I think as far as the investor's standpoint, the investor is balancing this red hot permission slip on the one hand with some of these nagging concerns which have not gone away, but we yet are not rising to the headline level. So there is, I believe, a need to still pay attention to them and be worried about that red hotness, but take this opportunity to diversify broadly and to stay with global exposure, given where that has been proven to be beneficial. So before we stop recording, any other thoughts, questions, anything on your mind that is sort of keeping you up at night as participants in the market?
Where do you think the AI trading is headed this year?
That's a great point. I think broadly, we will see probably less outperformance by the top tech stocks. We've seen already them be the lion's share, but if you actually look at what were the top performers over last year, they were not some of the top performers. Some of them have had strong performance since Liberation Day. So there's going to be more and more. There'll be some attempt to get to IPO, whether it's Anthropic or OpenAI. And that will be, there'll be this mass kind of dressing up of some of those stocks in the rush to IPO. And that dressing up will probably be a kind of almost like a pre-election in terms of making things look pretty. That's on the private side. So I do think that will cause quite a lot of excitement when one of those goes to IPO. In terms of where we prefer to be, it's more on the picks and shovels in the infrastructure side, the data centers, the energy, things that are less exciting perhaps in terms of the stratospheric rise, but are still very necessary. And in a way, they have locked in contractual arrangements, which will probably sustain their cash flows. So I don't see, but what I think is important, but I don't know how it's going to work out in the trade, is this moral pushback, this ethical pushback. Whether that will be in this administration, will it get attention, or will it be something that gets kicked down the road because there's a strong tailwind for AI with this administration?